Hello everyone and welcome back to TradeSmart, where we test and code the best objective rules-based strategies on TradingView. First of all, apologies for not uploading recently. I've been sick last week and I was working heavily on the upcoming 1k to 10k crypto challenge, where we will attempt to turn $1,000 into 10,000 in the upcoming crypto bull cycle. But now I am back, and to make it up to you, today I brought you a simple but great TradingView strategy script that I will share with you for absolutely free. With this TradingView script, you can backtest and optimize this strategy on hundreds or even thousands of crypto coins, forex pairs, stocks, and so on. Make sure to watch the whole video to understand the strategy at its fullest. Also, I've made my first few investments and potential airdrop play for the crypto challenge. I will share them with you at the end of the video. Don't worry, I've only allocated less than 6% of my funds, and they are all in well-established projects with market caps exceeding 500 million. With that said, let's get right into the video. The YouTube channel I found this so-called incredible indicator and the strategy is called SMB Capital, so shout out to them. I will leave a link to the video in the description. The indicator mentioned is the Keltner channel. The Keltner channel is based on an exponential moving average, which is the middle line, and an upper and a lower band, which are lines at a set ATR distance from the middle EMA line. This indicator can reveal if an asset is overbought, oversold, the overall trend, as well as suitable levels for take profits and stop losses. For example, if the price moves at the middle line, the price is at a fair value. If the price moves close to the upper band or above it, then the price is overbought. And if the price is hovering around the lower band or below it, it can be considered oversold. But the Keltner channel can also indicate price momentum and trend direction. If the price moves between the upper band and the middle line for an extended period, you are looking at an uptrend and it's time to look for long trade opportunities. Similarly, if the price trends between the middle line and the lower band, you've got a downtrend and it's time to consider short trades. And what about stop loss and take profit levels? If you want to use this indicator for stop loss and take profit, then in case of a long position, a tight stop loss can be placed below the middle line or a wider stop loss under the lower band. Opposite goes for short. For take profit, in case of long positions, you can place a take profit just above the upper KC line, and in case of short positions, right below the lower KC line. Well, as you can see, this indicator can be used in multiple ways. But the main idea behind the strategy mentioned in the video is the following. For long trades, first wait for the price to get close or touch the upper band, then wait for a retrace to the middle line, and then enter into a long position. For shorts, we are looking for exactly the opposite. Don't underestimate this strategy because of its simplicity. It is a really great concept. Take for example this long position. When you enter, the uptrend is already confirmed and your entry point sits at a fair value, which is a must for a good risk-to-reward ratio trade. So with that knowledge, I've built the strategy in PineScript. Now let's take a close look at a long and a short example to see how it works exactly. Okay, for this strategy, first of all, open up TradingView and set up the Sol USDT 30-minute chart. Once you got that, go to the description of this video or into the comment section and find the PineScript code of this strategy. Once you got that, copy it, then come back to TradingView, open up Pine Editor, then click on Open and New Strategy, then paste the code to this section and click on Add to Chart. If you've done that correctly, you should have the Keltner channel strategy on your chart. This strategy doesn't have many inputs, so let's go over them quickly one by one. The first two is for the ATR stop loss. You can set the ATR length and the ATR distance. Then you can modify the Keltner channel settings, then the trend filter EMA length, and then finally we have a candle lookback for Keltner channel touch. Let's search for an example and I will show you how it works. Okay, here we have an entry signal candle, then a valid long entry. For a very long entry, first the price should be above the 280 length exponential moving average. After that, we need to see a prior touch of the upper Keltner channel band, then a pullback to the middle line. Here I have to mention that the pullback can be further than the set candle value here. A valid pullback is set to a maximum of 120 candles. Let's see if we are within the range. The pullback was right there. And as you can see, it happened only 23 bars before the middle line touch. So this is well inside the 120 candle range. All of the conditions are met for a valid long entry, so we can enter into a long position at the close of the signal candle or at the open of the next candle. The stop loss will be placed at a set ATR distance. If we open up the Keltner channel strategy settings, you can see that we are used a 35 length ATR with a 5.5 multiplier. If you want to make visible the stop loss levels on the chart, then open up the indicators tab and type in NNFX ATR. Add this one to your chart. I already did that, so let's see the settings. I set the X value, which is the length of the ATR, to 35, and the SL value, which is the stop loss distance multiplier, to 5.5. In the styles tab, I just untick the buy TP, the sell TP, and the main ATR, and change the line styles to step line. This way it will be easier to see. Now you can see a lower band and an upper band. In case of a long position, we will put our stop loss at this lower band. Let's hide the stop loss indicator as we won't need it anymore. And we will exit the position either if the price hits the stop loss or if the price touches the upper Keltner channel band. And that happened right there. As you can see, the strategy exited the long position. This trade would have been a 1 to 1.44 risk-reward ratio with a more than 10% movement. Now let's find a short example. Here we have a valid short entry position. For a valid short entry, first the price needs to be below the 280 length exponential moving average, and that is this yellow line. Then prior to the entry, we need to see that the price touched the lower KC band and then came back and touched the KC middle band. After the KC middle band is touched, we only have one extra rule to confirm. The distance between the lower KC band touch and the middle line touch can be higher than 120 candles. So let's measure that. And as you can see, it's only 44 bars, so we are well inside the 120 limit. All of the conditions are met for a valid short entry, so we can enter at the close of the signal candle or at the open of the next candle. The stop loss will be placed at a 5.5 time distance ATR. So again, let's use our NNFX ATR indicator. And as you can see on the signal candle, the upper band was right there. We won't have a fixed take profit level. Instead, we will exit if either the stop loss gets hit or when the price touches the lower KC band, which happened right here. After the price touched this KC band, the strategy exited the short position on the next candle's open. Altogether, this trade was an amazing 1 to 2.18 risk-reward ratio trade with an 8.7% move. Well, that's all about this strategy. Now you know how it works, where to find the PineScript code for it, and all of the input step. Remember, the first two sections are for the stop loss, following two are for the Keltner channel, then the exponential moving average trend filter length, and finally the candle loopback for the Keltner channel touch. If you want to know how well this strategy performs on different assets and timeframes, just open up the Strategy Tester tab, and you will see the results right here. With TradingView, you can quickly scan if this strategy works on any other assets like the graph or H-bar, or if it works on higher or lower timeframes. I did a huge scan from all timeframes from 5 minute to 4 hour and on all of these cryptocurrency pairs. Here are the best ones I found. First we have Mana USDT on the 1 hour chart. As you can see, we get a great uptrending equity curve with 79 trades, 112% net profit, and with only 11.89% maximum drawdown. Oh, I forgot to mention one thing. If you switch to the Properties tab, you can see my position sizing. I am using $1,000 for initial capital, and on each trade I am investing $300. The commissions I used is a 0.05% fee per trade and a 2-tick slippage. The next one is the FTM USDT 1 hour chart. Again, great results, 76 trades, over 200% net profit, 2.5 profit factor and only 11% maximum drawdown. We also have the AWAX USDT 1 hour chart. with 68 trades, 150% net profit, 2.43 profit factor, and 16% maximum drawdown. Another great performer was Sol USDT. 69 trades, over 100% net profit, and 15% maximum drawdown. And the last one on the 1 hour chart was the VET USDT, this one. Again, very nice uptrending equity curve. The other time frame I found to be profitable was the 30 minutes, and there I found 3 assets, AWAX, Sol, and DOT. Let's take a look. First AWAX, and on the 30-minute time frame. Now we get a few bigger dips and a little bit sideways price action, but it's still good, with 64% net profit and 13% maximum drawdown. Moving on, Sol. We get over 100 trades, 83% net profit, 1.7 profit factor, and under 10% maximum drawdown. And finally, .USDT. Very nice uptrend, 94 trades, 61% net profit, over 2 profit factor, and only 5% maximum drawdown. When the drawdown is this small, we can easily increase our position size, so we get higher net profit, and we are still inside our preferred max drawdown tolerance. Let's try out doubling the order size, so 600 USDT. We are still well under 10%, and we now get 123% net profit. Well, that's all about this strategy. I think there are also many other changes that we could make to make it even better. If you have any idea, make sure you comment down in the description, and maybe I can do a follow-up video with an updated Keltner channel strategy script. And now let's talk about the airdrops I tried and the crypto investments I made for the challenge so far. When it comes to airdrops, it's all about farming some tokens before a project's official launch. These tokens often go to early users, boosting liquidity and product usage. For these airdrops, I will link 2 airdrop videos I followed in the description. Based on those videos, I attempted to take advantage of the Linea, the Layer 0, the Base, and the Orbiter potential airdrops. How did I do that? First, I bought 30 USD worth of Ethereum on Binance. Then, using Binance, I transferred the Ethereum to my Base wallet. Here I have to mention, when you do a transaction to a new wallet for the very first time, always test it with a small transfer to see if you are doing everything right. Once I got my ETH on Base, I used 2 bridges to farm more airdrops. One is Stargate, which can qualify me for a potential Layer 0 airdrop, and the other is Orbiter, which is also a potential airdrop opportunity. These bridge transfers cost around $2 each, so make sure you have enough Ethereum to pay the gas fees. So now I got my Ethereum on my Linea wallet. The next step is crucial for the Linea airdrop. To get the Linea airdrop, you have to complete tasks on this website. Each week you have new tasks like trading or proof of humanity. After completing a task successfully, you get XP points, which can potentially increase your airdrop. The most important task you need to do right now is the proof of humanity. You have only 1 or 2 days left to do that, so hurry up. Here you need to complete a total of 3 tasks. Most of them require you to validate that you are a real human using your Twitter account. But there are other options too, like proof of humanity through Binance or Google account. Actually, as I am not a big Twitter or X user, I couldn't qualify using my Twitter. But if you are a regular Twitter or X user, there should be no problem for you. If you want to do the Linea airdrop, consider using my referral link down in the description. And with that, now let's move on to the 1k to 10k crypto challenge investments I made. A quick disclaimer, this is not financial advice, I am not a financial advisor, these are my own opinions and trades only. Investing in cryptocurrencies is highly risky, especially when the market is booming like now with a fear and greed index above 70. Before consult with a registered financial advisor. Okay, as we are still preparing our list of tokens that we are interested in and researching them, I only invested in safer, bigger market cap coins that I want to hold long term. First of all, I did a quick sorting of my current crypto list. I filtered out the ones that made the biggest gains in the last 90 days, 60 days, 30 days and 7 days. This way, no overpriced coins are left that are more likely to have a pullback in the near future. I also filtered by market cap and the overall metrics these projects have. Then from the remaining coins, I chose a few that I am comfortable investing in even in these market conditions, meaning I am comfortable holding them even if they have a 50 to 80% drop in price. And these coins are Link, Ethereum, Matic, Polkadot, and Arweave. To give some insights on my portfolio plan, I aim to have around 30% allocated to blue chip coins that are above $1 billion in market cap. Then I want to allocate around 20% into mid-cap coins that I think have potential. These coins are in the 100 million to 1 billion range. Then I want to have around 30% in under 100 million market cap coins, which are highly speculative and risky plays. But overall, these are the coins that can potentially make 10, 20, 50 or even 100x returns. Finally, for now I plan to have at least 20% in stablecoins or USD for upcoming projects and airdrops and other opportunities. So, as of today, I bought $30 of Ethereum, but after doing the airdrop, I have around $20 worth of Ethereum left. I bought $20 of Link, $10 of Matic, and $10 of Arweave at these price levels. I also have a few limit orders placed for ETH, Link, and DOT in case we get a pullback at these price levels. Make sure you are subscribed and turn on the notification bell, as our next video will be the first part of the 1k to 10k crypto challenge. Upon its release, we will launch a dedicated Discord chat for this challenge where I will share dozens of research tools, my entry and exit points, price targets, DCA levels, airdrop opportunities, and a full spreadsheet containing our weeks of research. Plus, I will reveal promising upcoming projects that have potential for 10x moves, and my go-to YouTube channels where I get tips and research info from. That's all for today. Check out our Patreon for our best strategies and optimizations. And if you are planning to open up a crypto trading account, we have a few affiliate links with fee discounts and bonuses linked down in the description. If you are interested in which trading strategy is the best for the upcoming crypto bull market out of the more than 40 strategies and optimizations that we developed so far, check out this video. As always, thank you all for watching, have an amazing day, and see you in the next video.